Our utilization improved to an all-time high of 84.7%. Utilization excluding trainees also increased to 81.7%, which once again is an all-time high. Our volumes grew by 1.6%. Since last quarter, we started reporting revenues from new services. Very pleased to say the revenues from new services grew significantly ahead of company growth. It grew on a quarter-on-quarter basis by over 14%. Today, revenue from new services constitutes about 9.4% as compared to 8.3% in the previous quarter. Together with software, today 11% of our revenue comes from new services, and more than 50% of our incremental revenue this quarter come from new services and software. We have also seen continued adoption of our software platforms like NIA, where we have had over 200 implementations across 100 clients in the last few quarters. Net, we see good progress. We have also seen good progress on large deal wins. We won 5 large deal wins, total TCV of $731 million, with net new of $495 million, which again is one of the highest in the last few quarters. While the team has been focusing relentlessly on execution, the management team, along with the board of directors, also undertook a comprehensive review of our strategy. We looked at all the strategic elements. We looked at what is working, what is not working. We prioritized areas where we need to invest, and we came up with accelerated plans. One of the outcomes of this exercise was our reinforcement that our current strategy is relevant, continues to be relevant, and we just need to accelerate the execution. So our strategic differentiation will continue to be driven by design, consulting, and technology services enabled by software. Coming to the guidance, given our performance in H1 and the typical softness we see in H2, we have revised our revenue guidance to 5.5% to 6.5% in constant currency. Net, it's been a very good quarter all around, and we are continue to be very optimistic and confident about the future. Thank you. I will now pass on Ranga to say a few words.
Thanks a lot, Praveen. Q2 has been a quarter of stability and quarter of performance, overall performance. I think if you look at the customer relationships have been stable, as evidenced by the increase in the large deal wins that Praveen mentioned. Our large deal win trajectory continued to improve during the quarter, crossing $700 million. At the same time, our relentless focus on operational efficiency for the last several quarters continued into this quarter. I think you all know about the highest utilization. I need not repeat again about it. Of course, the on-site mix came down again this quarter by 0.7%, which also helped us. Likewise, the employee cost as a percentage of revenue, subcon as a percentage of revenue, and as well as the on-site employee cost as percentage of revenue. Several operating parameters improved during the quarter. All this led to a stability in operating margins. We are at 24.2. You would recall that our annual guidance for operating margins is 23 to 25%. If you look at the first half of the year, we are at 24.1, essentially at the midpoint at this stage. Now, coupled with that, we had a very healthy net margin improvement during the quarter. It was 21.2 for this quarter as compared to 20.8 last quarter. More than anything else, if you look at the H1, we had a very robust cash generations. Our free cash flow increased by 19% year on year on a half-year to half-year basis. We ended up over 41,000 crores of cash, highest ever on our balance sheet, and also $6.3 billion in dollar terms. I think the other part is this is also a quarter where we took several steps towards execution of our capital allocation policy. As you know, we announced the buyback. The board approved the buyback in August. Subsequently, it went to the shareholders for their approval. They also approved the buyback. Now, we made the public announcement on October 10th, and now it is we have filed the draft letter of offer with the regulators. More than anything else, on the employee front, all the operational efficiency improvements which gave the benefit, we also funneled many of that towards compensation increases to employees. As you know, we had one first phase of compensation increases to employees in effective July. Now we have rolled out to the balance employees, and also we had variable pay increase during this particular quarter. I think overall on multiple fronts, we have done, this particular quarter has been stable on, and also the performance has been very satisfying. Thank you.